Bam! If you watched our last videos, you're probably richer today. What's up, pickle traders? I'm Lee Ryder, and in this video, we're gonna do a deep dive on the 3-bar reversal. I'm gonna put the candles up here on the screen, and we're gonna take a look and identify how it works, what the methodology is, what the psychology is behind that pattern, and we're really gonna get into it so you get a good understanding. So without further ado, let's get into it. Okay, so up here I have on the screen, it doesn't really matter what chart it is. This happens to be gold on the 1-minute chart, but you can use any chart. Now the first thing I want to say is not all support and resistance is equal, okay? And what I mean by that is that if you can clearly see from this chart right here that we are in an uptrend. So if we take this signal in the short direction, it might work until the retrace, but it's not going to determine when the whole market is rolling over. So the strongest signals are going to be the one that are in with the trend. So as always, as we layer on top support and resistance levels, or we use statistical support and resistance, this becomes much better. But I just want to say we have a low here. We'll put low here, low here, low here. I hope that's obvious here. High, high, high. And then I'm just going to go ahead and start talking about this pattern. Now this pattern is either direction. It can be long or it can be short, and basically we're looking for 2 bars in one direction, a bar that basically opens at the same level, and then a close above that previous bar. Now I know that was a lot, but we can identify it really easily right here. Now this is actually one of my favorite ones, and there's actually a couple. So this is the first one I want to say. Now you need to go back maybe and watch the other videos about what wicks, but wicks are a very important part of trading because wicks show us where the liquidity zones are. Basically, when you see a big wick like that, imagine those big oil pumpers, right? Like it pumps in the ground, it pumps all the oil out and there's none left, so it leaves. If there was still oil there, it would keep going, right? And you can kind of think about wicks the same way. So anytime that we have heavy wicking, we want to be watching for a change in market, right? This is generally an indication that the trend is shifting or it's changing. Now, inside the training, if you come and sign up for the training or do the training, you'll learn all this even deeper. But what we call those are market battles. And this pattern that I'm showing you is simply a predictable marker of a battle outcome, and that battle outcome is from shifting of the bulls to the bears or the bears to the bulls. So that's just how it goes. So let's go ahead and identify one. Okay, here we are. We have candle number 1, candle number 2, candle number 3, and this is really the pattern right here, the 3-bar pattern. And then what we're looking for is a close below this bar right here, right? And so that would be right here. And so actually the close happens way over here on this bar. This is actually where your enters are, and then you would have to the downside. If we look, I have this saying, look left, structure leaves clues. And what I mean by that is if we're at a point in the price chart and we want to look for price structure, what we can do is turn our gaze to the left, and we will find most recently some sort of pivot point that will provide good structure. And this point is right here, and look what happens. The price comes and it wicks all the way through this area, and all of the oil is gone, and so it sucks its way back up. Okay, so that's why I said things that happen in this direction are not going to be as strong, because you got the pattern, but then you only got this short little window of when you were able to capitalize on that movement. And so as always, we want to be trading in the direction of the general trend. Now the next one I'm going to show you is going to do that. Okay, so same thing. We have some general movement. It's either an up movement or a down movement like this. And what I'm looking for is I'm looking for heavy wicking. So we start to get the heavy wicking all around in here. And then we get the 3-bar pattern right here. This is, I'll zoom in so you can see. And this is going to be candle, this is going to be candle 1, candle 2, candle 3, and you'll see this one did come all the way up that time and closed, so you could enter on this candle, right? And then your stop loss goes below the low, right? Stop loss, entry there. And then look, you have almost no drawdown and you're quickly in the money. As soon as you start moving up, you can start tacking your stop loss up like this. And that's what makes this so powerful, because when you're right, the price is going to move fairly quickly, and when you're wrong, it's going to hit your stop loss really quickly. So like, this is great. This does take some practice because you know, it's emotionally quite difficult if you have to take 2 winners or 2 losers in a row, and that will become more clear when we talk about when we take these up against structure. But yeah, that is the simple 3-bar pattern. So I'm going to go over another example just to make sure that it's really clear and that you understand it. And once again, we're going to look at one in the short direction. Now, just like I said, the trend is long, so the most powerful ones will be in the long direction. But nonetheless, we have another one here. We have our 3-bar reversal. We have an up bar, good strong bar here. And then we have an up bar. We have the final topping bar. We have wicking. And we have a close below, oh, here, this bar here. So we can see that we would enter here, and then you can see we got look left, structure leaves clues. So we look left, and where is, you know, look left, where's the next structure? That could be anything, and I want to draw you again, look to the wicks, right? So we look left, structure leaves clues, and where's the last place that we had structure? It's right here, and the price came almost down there and touched it. So like I said, that move wasn't that strong because it's counter trend, and those counter trend moves are always going to be a bit shorter. Okay, so now we'll do one final one. We'll do one final one, and this is in the direction of the trend. So once again, look left, structure leaves clues, and you could see if you'd have done that you already did have that structure point, and then you would have saw this pattern here. We have a bar number 1, bar number 1, bar number 2, bar number 3. And really you could say this is bar number 1, bar number 2, bar number 3. But the general idea is we have these 2 bars moving lower, 2 bars moving lower, 1, 2. We get the bar that has the opposite color or opposite trend direction that closes. And usually this is a small bar, and usually it will close within the wick, right? Now this bar had no wick, but it would be not uncommon to see this close within the wick. And then we want to close on or enter on the break of candle number 2. And so then what did you do? Stop loss goes below the low. You entered here. Price goes quite a good direction till next structure, right? And then you can get out. Or you can ride and keep going. You'll see here we have that pattern that happened again, and it looks like the market wants to go back up. So this is a great little pattern to know, and to specifically using this pattern around points of support and resistance. It is very, very strong. It's actually the only pattern that I really use in my trading, that and indecision candles. That's for another lecture. If you like this video, don't forget to like and subscribe, and then watch our next video. We'll see you in the next one.